Hello everyone, welcome to our Accounting 210. In this video, I want to talk a little bit about the bootcamp, that assignment. So let's go to our course and then go to the left side. You will see this assignment, bootcamp assignment. It's an Excel file and then it's due before around your first exam, I believe. No late submission, so make sure you don't wait until last minute because sometimes you may have trouble. As I said, you may not be able to. It may crash for whatever reason, so don't wait until last minute to say, I can do it on the last 1 hour. Don't think about that. Don't have that plan. So you click it. From my perspective, is I click it. And then I just open from my download part. So from my download, I click this Excel file. Let's see. Okay, as I mentioned in the syllabus, make sure you enable editing. Otherwise, you will just see that big picture there. Give it a second. You enable content too. Enter ID or nickname, so I just put my last name there, put my first name, put my last name, and then let's get started. So you have this 1, 2, 3, 4, 5 different parts. Once you do this, and then it also shows you the video in case you want to watch the video first. For the first one is accounting equation. You click it. Then it will say accounting payable account is what? Account payable is your liability, right? A loan to buy a car is a liability too. So prepaid advertisement is, well, I'm not going to finish. So once you finish, you can say everything, then you can do next part, I believe, total correct, whatever you may want to review or something. So once you finish all this, let's say you may want to review. Okay, he said, okay, so show result and then exit my bootcamp. So you can see all this here. I just got 10%. So I exit bootcamp. Then I save my results, right? So I save my results. I put my results here. So I put my last name, or I put my last name, and then I think, yeah. So then I upload it. From your perspective, I believe. If I have the student there, from here, I click this one, and then I attach my file, I attach that file, download, I attach my file, I think it's this one, I'm not sure which one, but I attach a file there, I upload, I submit, then you should be able to finish the submission part. If you have any questions still, you say, I'm not sure whether I submitted it properly, yes or no, just let me know. As I say, this assignment, you have an unlimited attempt. You can do whatever you want to do until you get the highest points. But since we are already doing that, I want to review the financial accounting actually very briefly with you. So I create a new, let's say this is bootcamp, and then financial accounting, okay, financial accounting. I put a review there with you. I'm not sure you still remember 210, yes or no. But in 210, the main thing, especially when you do chapter 3, you will still use journal entry. General idea is, we said in order to have your own business, the accounting equation, the very basic accounting equation is what? The accounting equation is assets equals to liability plus stockholder equity. Why we have this? Let's think about this. You said, hey, I want to start my own business. I really don't like studying. I quit my school and then I start my own business. I have no idea. I sell ice cream. Okay, I like ice cream, so I sell ice cream. So I need to have 100. That's too much. I need to have $10,000 to set up my own ice cream store. So how do you get that 10,000? That 10,000 will be your assets. How do you get that 10,000? You have two resources. One is you can borrow money, liability, right? You can borrow from bank. You can borrow from your parents. You can borrow from your a girlfriend, boyfriend, you know, family. So you got $3,000 from the liability. Not enough. What else you can do? You can have the stockholder equity. You can share the portion. You can share your portion of the ice cream store with your family instead of they are the debt holder. Now they are stockholder, right? Stockholders. So instead of you pay them a fixed interest, now they are connected with you. If you do well, they get more profit. If you do bad, they share the loss with you if they are shareholders. So that is why we say assets equals to liability plus stockholder equity. Assets equals to liability plus stockholder equity. And so this is the main thing. This is our balance sheet. You know, it kind of recall at the end of the year. It's like you take a picture at the end of the year, December 31st, 2020, at the end of the year. But we also have income statement. Income statement is your whole year, right? For the year ended on December 31st, 2020. So general idea is your revenue minus your cost of goods sold gives you gross profit minus all of the operating expense minus all of the operating expense gives you operating income. We want operating income to be higher, that means better. Okay, you also have other financial statement. I'm not going to talk too much, but let's go to the next part is what debit and credit, So you have a lot of accounts, you know, you have assets account, you have liability, stockholder equity, you know, revenue, expense, you know, those things, dividend. So how do we find out what is debit, what is credit? You know, this is not financial accounting, so I'm not going to talk too much detail. But how do you know you should put in the debit side, in the credit side? I'll give you an example. Let's say just very simple, right? I spend $10 and then I buy a cup of coffee, okay? So with the cash, okay? So this is my transaction, During this transaction, what happened? You decreased the cash and then you increased the coffee expense, right? Coffee expense. So you have to debit something, you have to credit something. So how do you know? Hey, you can memorize, hey, if cash is asset decrease, you credit. You kind of can remember. But I want to share one magic word with you. Okay, open your eyes, you know, open your ears. Hey, focus. Magic word, magic, boom, magic, magic, boom. What I want to share. The word is D-E-A-D. How do you read it? Dead. You say, hey, professor, you are not nice. Why you say dead, right? It's not saying you are dead or I'm dead, right? It's not that word. What's the meaning? It means debit, expense, debit assets, and then debit what? Dividend, okay? You debit these three accounts when it increases. When it increases, you debit expense, assets, and dividend. You debit. Let's test it. Let's test our magical word. Okay, magical word. I like my magical word. I highlight my magical word. You debit expense, you debit assets, you debit dividend. If they increase, you debit them. Let's look at this example. You spend $10 on the coffee expense. What increases? Coffee expense increases. What should we do? We debit. Okay. So we debit coffee expense. And what should we credit? Our cash is asset. Cash decrease. We debit when it increase. So what should we do when it decrease? We credit cash. We credit cash when it decrease. So $10. That's 8. I stop here. As I keep saying, we are not financial accounting. It's a very basic journal entry, but remember this magic word, boom, dead, right? Debit, expense, assets, and dividend when it increases. Okay, I stop here. Let me know if you have any question with the bootcamp, that Excel file, Or if you trust me, let me know if you have any question with the financial accounting. I see you next time. Thank you.